Good evening. I'm Epstein on this Valentine's Day. Happy Valentine's Day all for February 14th, 2024, your SPDR ETF stock market wrap-up. Interesting day. A rally day in a lot of the markets, but something else is going on. Are you watching all the amount of layoffs that's happening? Cisco, 4,000 they announced. Morgan Stanley, 300 to 400. That's on to the, 35,000 or so we've just heard. It's not that the numbers are monstrous. It's that they're taking place. And they're taking place in big companies, and a lot of them are tech companies. That didn't happen last year. People were scared to let people go. They couldn't replace them. Now they're not fearful of that. That's a big change. You got to take notice of that. That is the lag effect, in my opinion, starting to hit the labor market. It's right in front of us. I don't see anybody talking about it. I'm talking about it. It's not that the numbers are that large. It's going to drain down and hit smaller companies, mid-size, and then the real small ones as well as the economy cools. Now, cooling does not mean recession. I want to be ultra clear on this. I don't see a recession happening in the United States. Even with this labor cooling, that going up unemployment a bit. I don't know if that I'd get nervous about it. It's engineered. The key for the Fed is to do what? Watch it, stay ahead of it, and don't let it develop into something that now they've got a plane in a nosedive, they got to pull it up. You don't want to do that. So that's where you keep hearing so many of the different people talking about the potential. And I want to use that key word, the potential for the Fed to cut May or June. It's all it is the potential. You need to get the economic data to the point where the Fed reads through the data and then sees the visionary part where it comes down. We got to get through PPI on Friday and then PCE at the end of the month, and then we get a jobs report. I think that combination is going to give us a real good idea as to how this economy is headed and where it's headed right now. Things I'd watch right there. Tomorrow is a day full of information. You get jobless claims at 7:30, the Philly Fed Regional Business Activity Index at 7:30, the New York Fed State Manufacturing Survey at 7:30, advanced retail sales at 7:30, and January import-export prices at 7:30. I'll be busy then. Then we get the Federal Reserve monthly industrial production and capacity utilization data, and that comes out at 8:15. A number of Fed members have been talking about that. So you want to watch that. You want to see if the capacity utilization is making up for labor losses. In other words, they're getting more for less. National Association of Home Builders, well, they'll come out around 9 o'clock with their monthly housing index, but we know housing is going to be strong. We keep hearing about it. It's interesting to hear today in New York, and New York is not the United States. New York is unique, all right? New York's like a Hong Kong, a London. But the top tier of the market are starting to see prices come down on rents. So that's the beginning of something for the top end. That is not for the average person out there. By the way, what do they define as the top tier in rents, okay? That average is $5,000 almost a month. So it just gives you an idea. It's a different world in New York than it is in other places. All right. So in the market now, let's take a look and see if we see anything here. First off, this is an attempt to fill a gap. This gap gets filled right here. I think that's the 304.57 level. You got within it by about 40 cents today. We'll see if it can fill it or not. But this is the attempt and cadence to get that filled. When you look at the chart action, this is not anything but distribution now. Market's out of an uptrend. The market has a higher high and lower low, and it's spinning all of a sudden. When you look at where the battleground is, it's pretty close to what I call that line in the sand, the 18-day average of closes. Right here, the 18-day MAC, moving average of closes. Bigger supports under the market, but if you break again, the first major support's probably going to be the Bollinger Band at 284.55 before you get to anything down there. And I keep looking for the market to come down, not up, because momentum is pointing down at this point. We had that big move, come down, you get a bounce. I don't see this market reestablishing an uptrend. In fact, I'll scare you. If you take out today's low and you close under the 18-day average of closes, you're in a full-fledged downtrend all of a sudden in the market, and it points to something even lower because you'd have lower highs and lower lows. You can break that pattern, but that's what you'd have if that occurs. Then we get to lift. It was only up 35% today. And I know people wrote and they said, it was a misprint. I don't think you understand. Having owned a brokerage firm in stocks, commodities, I still own my division where I'm at. I know how this works, especially today when you have traders that come in with automated trading, and a lot of them, you don't get a call from your broker anymore. If the market moves a certain amount, there's automatic blowouts. And I was watching as that market took off the other day. Remember when I said it was up, 60%? It was insane in the aftermarket, went up to $20. Well, today you're making up for that. These companies are doing better. And Lyft and Uber, Lyft is no Uber. Let's understand that. This is a far distant second, but it's the other player. So as the other player, if it starts becoming profitable, people go, oh, that's exciting. And you have a base to work from. This market came down, it built a really nice base, so it's in an uptrend. Is it getting excessive? Yes. Do you buy over Bollinger Bands? Well, that's up to you to do. I know what I teach in my course, and I certainly don't tell my clients to do that. But, you have your own money. You know what to do, I assume. If not, take my course. We'll talk about that in a minute. I'm looking also here at the upper Bollinger Band, and the gasoline fund is acting as resistance suddenly. Why? Because you've got the pattern now of a lower low and a higher high. You'd have to get over that number and keep going. Now, that can happen. The situation in the Mideast is heated up again. So Israel is pulled out of the talks with Hamas. Hamas's demands on Israel are insane. Israel is not going to pull out its whole army. Israel is not releasing every single prisoner. And this is what they want. Murderers, doesn't matter who, that Israel has in jail, to release them back into Gaza and pull out. And then within a certain time frame and a staggered amount, whatever hostages are alive, they'll release the 80 or the 100. It isn't going to happen. If they want to stop Rafah and this thing going crazier, Hamas, have to be more realistic on what they can get. This is not what they're going to get, period, all right? And that's how it's going to work. The part we have to worry about is now we're starting to see that between Lebanon and Israel, there's missiles that are going deeper from Lebanon into Israel, and the strikes from Israel are getting more aggressive back on it. It's almost like they're so far, I'll quote unquote call it what I read in the press, a gentleman's agreement to not let this yet explode out of control. But I would assume that if the troops go into Rafah and all of a sudden we wake up and there's 500 people killed one day, bombs, whatever it is, things could get quickly out of control because everybody's looking for a fight there and everybody wants to do whatever they're going to do. Israel's got a timeline. The world's against what they're doing in a major, major fashion. They're basically standing alone. They don't have the U.S. as the ally that we once were. The killings are too many. And there's no game plan to end this other than they're going to wipe out all of Hamas. That's not realistic. So somewhere along the line, the two sides got to come together and get this done. Israel pulling out of the talks was, well, I understand why they did it. It's not even a starting point. So you got to come to the table with the starting point. Not that I'm here and you do everything. You're destroying me, but you pull out, you do this, you do that. Let everybody go, and then I'll give you your 100 people. Isn't going to happen. XLF. Higher high, lower low, battleground 18-day average pulling down a little bit here. So the financial services are trying to figure out, what do these rates higher for longer mean for it? That is the definite thing that they're trying to figure out, and it's not the easiest picture to pick up from. In XLI, the industrial sector, I'm at a loss. I want tomorrow's reports that I just showed you to show that industry is doing better. I don't see it, but maybe we'll start seeing out at some of the Fed districts too as we start getting more of those notes that it is happening. But this is a new high for the move. It kept its embedded reading. I must be honest. I have my clients long this. If you have my morning subscriber video, we bought the break. And we have been sitting, I thought we might get stopped out yesterday had we lost the embedded reading. It didn't. And the market's up to the area now where I'm looking, okay, probably time to take some money off the table. I'm shocked that the trade worked out. That's just honesty with it. AMC, I am more and more convinced we've got our low in place right here. Now, what I expect is we're going to get terrible openings between now until we get into somewhere in March when the good movies start to come out. And that's when so this next pullback is the one that I'm looking at, but I do think that you've seen your low for let's call it for the summer. Isn't that a strong statement? But I don't expect that to be taken out again anytime soon. RSPD, okay. If this market closes under 47.17, gets under 47.10 first, but closes under that, I get a sell signal in this. I'm not saying it's going to happen, but that would give me the sell signal that I'd be looking for in the market. So interesting story there. In the home builders, I feel good that it rallied because I've stuck my neck out and I said, these are the home builders, not homes that are existing. They figure this game out. They're not building spec homes. They're waiting for you to come in. Here's my deposit. Here's what it is. I'll get this done. Here's the payment. They want the money guaranteed. No risk to them. And there's big demand for it. And they're going to get backed up. You watch. You're going to read about that. I really believe that. In the energy sector, okay, problems. You close underneath 83.32 and you close today at 83.30, so you're in a bear mode until you take out yesterday, not today, but yesterday's high. You've opened the door up for the 8100 zone, about $2 lower in my opinion on that. In the gold market, I'm going to repeat. A strong dollar, high interest rates for longer are the total enemy of the gold market. It's not responding to the Mideast war. It's not responding to Ukraine. It's not responding to the fact that we have done nothing on the U.S. budget because the market already knows what's going to happen. I know what's going to happen. Come March 1st to the 8th, those two key dates, we're going to hear the talk. Well, we can't shut it down. Politically, it's killer, but we can't agree, so we'll give you another extension. That's fully what I expect is going to happen. There's nobody in Congress really working on a budget that's going to make sense. Neither side's willing to give in on anything now. Higher high, lower low, coming down, oversold. But silver on futures is doing better than the gold market. It's responding very well to the Bollinger Band lows and giving you a bounce. Now in copper, the Chinese return from Lunar New Year. Saturday will be their first real day back. So look to see if they start placing orders, buying. They've been drawing on supplies. We'll see where they're at. I, of course, am not a fan of what's going on in China. I happen to think that the president has turned, not our president, their president, has turned the economy, flip-flopped it, back to the old communist China where you don't want to innovate, the people will move. Anybody with innovation will create companies ideally outside of China. They can get themselves out, they probably want to. I'm talking the moneyed people. I know the workers are there. Nobody's giving up. We will keep our supply chains in China. They're just smaller ones. India is the big winner. Indonesia is the big winner. You see that, I see that. And I don't see anything where they're changing their philosophy. So they've driven out Western business. It started with COVID. It started with their denial. It started with how they handled it. It started with the supply chain issues, and it's gotten worse, not better for them, not for the rest of the world. We now, as the Western world, have better supply chains, better countries to do business in. Their economy's aging compared to India, too, something to pay attention to. BND. Lower highs, lower lows. Okay, so the first support, the Bollinger Band was hit. You hadn't hit it since back in January. So now you finally have come back down there. It's paused. That's all it is. This is not a market that's turned its corner at all. It could embed. You've got the PPI and the PCE coming out, so you got 2 weeks between those reports. So this Friday we get one set, then we have to wait. Remember, one of the big events that's going to happen in the markets is going to be NVIDIA's earnings on the 21st, a week from today. That is going to be looked at by the markets in a hard way. That is the darling of the market. Remember that. In UUP, the dollar, still strong at fighting the Bollinger Band. If it embeds, go even higher, as I said. I have, in the futures, you can get up to the 107 area potentially. Well, that would carry you here easily into the 28.60 area if that happened, another 50, 60 cents higher. And in the euro, the question is the race to the cut. That's what's going on. So in Europe, I wrote today about a number of countries. I don't know if it was this morning, I think it was, explaining how Germany, the faltering there, how it's affected Eastern Europe and how Romania, Poland, how many countries do about 20% of their business via German orders. And Germany's not getting the orders. Germany's making big investments in China. I don't know if you're aware of that. Huge investments right now. Will they pay off? Will it turn their economy? I don't know. But they are doing that because the relationship between Europe and China is very different from that of the United States and China. So remember all that. You put it together, you get your game plan, but you keep hearing me talk about Bollinger Bands. Learn them. My course is there for you to take. All you do is you move your cursor up here. It'll be an icon. Click it. It'll take you to our website, iraepstein.com, under Education, and you'll see the Enhanced Bollinger Band course. Or you can just watch this ad and follow the instructions there again. But still, follow that icon or go to iraepstein.com and go to Education. Pretty soon, I'll be putting out some special reports. I haven't done so intentionally. I want to at least get through the PPI, and then I can start putting out some of these reports. I'd look foolish doing it one way when we're right at a cusp of what the market's about to do, in my opinion. I'm Ira. You have yourself a good evening. I'll speak to you all in the morning. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.